Hi and welcome to the Market Alert for the start of a new week. It's Monday the 9th of June. Stocks and bonds yields jump on weak as easing uncertainty trumps DC turmoil. The turmoil being Musk and Trump, of course. That's having a bit of a spat at the moment. Stocks and yields rise as NFP beats calms economic fears as well. So there was an increase in the numbers on Friday, which you can see there. We actually forecast at 129, came out at 139. This was bullish for the market. So let's have a look at the markets and kick off with the Dow. So in the Dow, we hit 42,924 on Friday following those NFP numbers. The market was above and is just about above the 200 MA in the overnight session there at the moment. So yeah, the Dow up, all looking very positive. We can expect more of this going forward and get back to those all-time highs as we move forward. There's carnage all around, everywhere you look, wars and everything else, but the markets continue to move to the upside. This is the monthly chart. So again, you can see where we're heading. Market has recovered from the trade talks. We see those, of course, the postponement, my teeth in this morning, from the 9th of July. So we've got another month where the market quite happily moved back up to 45,077. And in the 30-minute chart, you can see the market up on Friday on those numbers. Bit of a damp squib in some regards. Market pulling back and up and then trying to move back up off the DP and been holding there overnight. Meanwhile, in the German DAX, the all-time high of last week, 24,487, wasn't even looked at during Friday. The market becoming very quiet as we head into summer. You get the vacation periods and holidays and school holes and all that sort of stuff that's on the agenda. And again, the market obviously waiting for these final numbers from Trump trade deals on the 9th of July. I sound like a broken record, but that's what it's waiting for. You can see how choppy the DAX was on Friday there as well, very choppy. Moving down slightly overnight. Watch the low and the S1 and the 200 MA in the 30-minute chart if you actually look at this. That's where you can expect some support. Just have a look at some of the other time frames. The weekly chart there, also sideways to higher. Did a great recovery recently following the Trump talks and trade nonsense. Let's just have a look there. We've seen the market move back up over 5,681 points following that postponement. So price is up there. And if we look at the 30-minute chart, like I say, we've already looked at that. Market sideways, just needs to stay above the low and the 200 MA in this time frame. Meanwhile, in the S&P 500, the market continuing to remain bullish, staying above the 5-bar moving average during Friday. 30-minute chart also, again, you can see the explosion to the upside following the NFP numbers. And overnight, the market sitting on the DP and the 50 EMA is there for support as well. Meanwhile, in the UK, it's a big one this week from Rachel from Accounts. But the market continues to move higher. Again, if we just look at the weekly chart, you can see there that we're moving back to the upside. We're about 89%, aren't we? And the market will love whatever she's going to do this week because it's loved everything she's done so far, as you can see. So just a matter of getting above the high. We're above the 89, so not a problem to get back to the all-time high. No doubt Rachel will make sure that happens this week with her friends in the city, just to keep the illusion alive that everything is fine in this country as far as the economy is concerned, which we know is not. So the daily chart there, say the market moving up green all the way at the moment, and the 30-minute chart moving up initially on Friday, then with the NFP numbers and sitting at the DP as well, nowhere near the low like the German DAX at the moment. So in the US dollar, market is sideways, as you can see there, as prices are moving slightly lower overnight. Just want to come back to the economic news while I'm thinking about it as well. Today, let's just have a look at today. We've got French and German holiday. If you trade with Trade Nation, watch the spread on their platform. A big one this week is the CPI numbers on Wednesday from the US. They're out at 1:30. and the forecast is for 2.5, previous 2.3 there. What else have we got? Anything from the Fed? No, so a fairly quiet week this week as well. Just that CPI number. Right, let's have a look at the metals. And silver continuing to move higher, went through 36, got a high of 36.32 on Friday. 30-minute chart, at the moment the market is sideways and trying to move back to Friday's high there of 36.32. A lot of interest on the upside at the moment, obviously a lot of speculation as well. As I said before, unless we get through $50 an ounce, I'm not convinced of any move. That will have to take out the 2011 and the 1979 high. Meanwhile, gold struggling a bit. As you can see, it's just in a consolidation phase at the moment. We've got sort of two of these going on, which you can see there. That's just a spike to the downside after a Trump comment. So stuck in the consolidation phase, which it needs, to be honest with you, because if you look back at the monthly chart, you can see that we've had a good run and the market needs to trade sideways in order to move to the upside once more. So 30 minutes of gold, you can see has been dragged down there compared to 30 minutes of silver, which is held. This is all unusual. See Friday's shakeout, market's held from there. So let's have a look at the gold-silver ratio. Gold-silver ratio is down. We've got a gap. That means it's got to be filled. So expect the market to maybe sell off a little to allow the prices to fill the gap, or gold rallies and silver holds sideways. There was the gap that we saw a few months ago, and I said it will have to fill it. Came back, filled it, and then dropped down. So expect the gap to be filled. I'm expecting a pullback in silver prices, because even just from a Fibonacci basis, you can expect that sort of thing to happen from there to there, which you can see at the moment we're down at 78%, so down to towards 89, which will be down around about this level here. So yeah, expect a bit of a pullback in silver or gold to rally, and silver hold to bring the market back off that 89%. Right, let's have a quick look at Friday's trades. So on Friday, the market's waiting for those NFP numbers, the market rallying to begin with, and then putting in a sell signal with prices moving down to the close, where you can see the buying coming in, market reversing, prices then trades sideways off and then break through the close, and then manage to come back to the close. This sort of action is designed to get you to go short. You see the buying coming in, and then they bring the market back to take out the stops, and then we get into a sideways range. The green returns, and market waits for those NFP numbers, which we'll just fast forward to. There's the red line, and then you get the market's reaction. Prices spike to the upside, but then didn't hold, as you'll see there, moving back down to look at the close once more, and then back through the DP. Into the afternoon, prices were sideways to higher. A lot more volatility during Friday. I'm not expecting much today. It's a German holiday, so prices could be quite choppy today. Then we had a potential buy, and that wasn't filled because the stop loss was hit before the entry, and then prices coming back down to the 200 MA once more, then to the DP, another potential sell, and then this is followed by a buy. The buy wins. We see the market move to the upside there as prices hold towards the close, and then we get another sell, which is not filled within the three specified subsequent bars, and then prices just trade in a range for the remainder of the evening there as we head in towards the close of the Dow, and of course the weekend there. Quick look at overnights, and the prices are currently sideways in a 12-15 point range. Not a lot going on there, but let's have a look, see where we are in the bigger picture. We're closer to the low than we are the high at the moment, but we certainly need to switch these averages to move to the upside and get through the DP. So electronic session today for the German DAX, as it has a bank holiday. Right, that will do it for this one. That's a quick roundup of where we currently are. Let's see what happens today. Like I say, keep an eye on the fact that we've got the CPI numbers on Wednesday. The market will be focused on those. Have a great day, and as ever, thanks for watching. See you in the next one.